Creamer Media's Mining Weekly is interviewing Edward Stirk, the Director of Research of the World Platinum Investment Council, which has just published its Platinum Quarterly for the third quarter of 2023. Ed, it's great to chat to you once again. Mine supply is expected to remain low in 2023 and will increase by just 3% in 2024, next year. What are the factors behind this, and how long is supply likely to remain constrained?
Well, thank you, Martin, and thank you for having me on again. So with regards to this year, 2023, mine supply has been held back to a degree by planned maintenance, mainly in downstream processing infrastructure in South Africa, as well, more at the beginning of the year in terms of the impact, the ongoing challenges that Eskom is facing in South Africa and the shortage of electricity supply. Now, those problems seem to have eased a bit, and certainly the miners have done a good job of managing the challenges that the electricity shortages have presented them with. But looking into next year, it's predominantly a result of just further planned infrastructure. So Nor Nickel has a large smelter rebuild that was originally planned to be conducted in the fourth quarter of this year. That's been deferred to next year. The impact of that is still pretty difficult to assess fully. But then there's also some further planned maintenance scheduled for some of the producers in South Africa as well. With regards to the final part of your question, how long will the restrictions on mining supply remain in place? That's pretty difficult to call. I mean, I think a lot of it really depends upon what happens with Eskom. Does Eskom manage to solve its problems, or does the situation deteriorate? If it deteriorates, then obviously we'd expect the headwinds facing mining supply to continue for longer. And also what other planned maintenance is scheduled over the near to medium term. So, I mean, as things stand at the moment, we would expect mine supply to gradually normalise through time. But if Eskom's challenges remain, then obviously, the headwinds would remain in place as well. The final thing on supply over the medium term, of course, is the impact of the fall in the palladium and rhodium price on the basket price and the profitability of the operations. And certainly some of the producers have said that there are some shafts that are looking unprofitable at the moment, and therefore there are some risks of either suspensions to operations or potentially optimization efforts that may result in lower output in the future. That's still to be seen.
And platinum recycling supply has also decreased this year, with low levels expected into next year. Why is this?
Well, that's an interesting question. So if you recall, in November last year, there was a scandal that emerged in the US where an aggregator of spent auto catalysts was raided by the FBI. A bunch of people were arrested, and they were effectively accused in dealing with over $500 million of spent stolen catalytic converters. Now, in North America, it seems that trying to prove the provenance of spent auto cats is something that's acting as a bit of a challenge for the recyclers there and holding back supply. And looking at the numbers, recycling volumes are down sort of 50 to 60% year on year, depending upon which recycler one's looking at. In a broader sense, however, the bigger issue seems to be that there's just generally a shortage of end-of-life vehicles. So as a result of changes in lifestyle, post-COVID, more people are working from home more, they're driving less, they can run their vehicles for longer. And added to that, of course, we are going through a bit of a tricky economic period. There are some economic challenges. The disposable income levels have been compressed. And so, as a result, we're also seeing economic pressures on consumers that are resulting in them deferring new vehicle purchases and running existing vehicles for longer. Now, interestingly, in the contrast to that, we are still seeing increasing output of new vehicles. So, it seems like there is still a bit of a bounce back from the underproduction through COVID and the semiconductor shortage of the last couple of years. But still, the vehicles that would normally have been scrapped are not being so. Maybe they're being shipped to more developing countries where, again, there's been a bit of a shortage of new vehicles. So it's hard to say. But at the moment, all we can say is that recycling volumes are down quite significantly, and it looks like they're going to be depressed for next year as well.
And sticking with automotive demand for platinum will jump by 14% this year and continue to increase in 2024, although more modestly. What is driving this increase at a time when challenges within the automotive sector has meant fewer vehicles in production overall?
Well, I mean, part of it is that there is a bit of a bounce back in overall vehicle production from those challenges that I mentioned earlier, COVID and the semiconductor crisis. But looking into next year, we are expecting fewer internal combustion engine vehicles being produced next year than this year. So 77 next year versus 78 this year. And so the increase in automotive demand is linked to a couple of different factors. Firstly, there's still increasing platinum for palladium substitution in the exhaust treatment systems in gasoline vehicles. So that's just purely on a price differential. Obviously, the price differential is closing a bit, so that may begin to slow down in the future. But additionally, there's, for this year in particular, tighter emission standards. That's very much a kind of China story this year. So they've tightened the emission standards for the heavy duty vehicles and brought in emissions control standards for the off-road or non-road vehicle category, which has resulted in quite a big increase in PGM loadings. And then finally, there's just a bit of a change in the drivetrain mix. So we're seeing more hybrid vehicles being produced than in the past. And hybrid vehicles where you've got it's either a plug-in hybrid or a mild hybrid where you're harvesting some of the braking energy and returning that to the motor when you're accelerating and things like that. Those vehicles are running more of the time with the engine turned off than a conventional ICE vehicle. And when the engine's turned off frequently, obviously you're operating at a lower engine temperature. And so in order to meet the emissions regulations or the limits to emissions, you need higher PGM loadings to ensure that those vehicles remain compliant. So that's typically a 10 to 15% increase over a normal ICE vehicle. So yeah, it's a number of different factors that are playing into those increases in automotive demand. And we expect some of those trends, particularly things like hybridization, increasing hybridization to continue for the next few years.
Industrial demand is always interesting. 2023 will be a record year for industrial demand for platinum. And 2024 coming up is said to be the third highest. Which sectors in particular are interesting to highlight?
Well, I think probably the number one sector to highlight would be the glass sector. So platinum is used in a platinum rhodium alloy that's used in the glass bushings for the production of fiberglass. It's also used in the casting vessels for fiberglass and for high quality LCD screens. Now, that's really been one of the big drivers of the increase in demand for 2023. We do see things easing off a little bit for 2024, but as you mentioned, still the third highest year for industrial demand on record. And just specifically for the glass sector, it's worth noting that we're expecting a doubling of installed wind turbine capacity between now and 2030, which is quite a significant increase. And those wind turbines, the blades for those wind turbines will largely be made of fiberglass that requires the platinum-containing facilities for the manufacturing of the fiberglass that goes into those. In terms of other sectors that are worth noting, the medical sector is continuing to grow at a fairly steady pace. And additionally, within the industrial categories, we have the electrolyzers, and stationary fuel cells. So this is related to green hydrogen. And whilst it's starting off from a small base, it is growing pretty quickly. So proton exchange membrane electrolyzers, which contain platinum catalysts for the production of green hydrogen, and then also stationary fuel cells, which contain platinum catalysts for taking the green hydrogen as an energy carrier and using it to generate electricity.
Investment demand will be positive for the second straight year in 2024. However, not as high as in 2023 this year. What forces are at play when it comes to investment in platinum?
So in terms of investment in platinum, you can divide it into two categories broadly. So there's bar and coin, which is mostly the retail market, and then ETF and exchange stocks, which is more oriented towards the institutional investor. So in terms of bar and coin for this year, demand was pretty strong at the beginning of the year. It then went through a little bit of a weak period and began to pick up again in the last quarter. For next year, we're expecting bar and coin demand to be a little bit lower than for this year. There's a couple of reasons for that. So firstly, as I mentioned earlier, with regards to automotive, we're seeing a bit of a compression in terms of disposable income, and that's probably going to weigh on borrowing coin demand a bit for next year, particularly in North America. Also, in terms of the sort of different geographies, it's possible that we'll see some net disinvestment occurring in Japan, just looking at what's forecast to happen in terms of platinum prices in yen terms. So it's an active market in Japan. They're active buyers and sellers of platinum bar and coin, depending upon what the price is. And we'll certainly be working really hard to try and help positive investment flows in that geography. In terms of ETF demand, this year was looking fairly constructive with positive ETF demand. Things have softened quite a lot over the course of the last quarter. And looking at next year, it's really a question of what's expected in terms of interest rates. So precious metal ETFs, gold, silver, or platinum for that matter, they're non-yielding assets. So when you've got a high interest rate environment, they look relatively less attractive to an institutional investor than something that's going to generate an ongoing return. I would say that there is in our mind at least a relatively decent chance that whilst the narrative around interest rates is for higher for longer, that they will begin to be cut going through next year. And so that will, on balance, make platinum ETF look relatively more attractive than it might do right now. And particularly with the ongoing and projected deficits in platinum and how that might reflect itself in market dynamics and pricing, certainly there may be a more constructive reason to hold platinum ETFs over the course of the next year than is baked into our base case and fairly conservative forecasts.
That was Creamer Media's Mining Weekly, speaking to Edward Stirk, the Director of Research of the World Platinum Investment Council, which has just published its Platinum Quarterly for the third quarter of 2023.